Hello and welcome to the Weekend Investing Daily Bite of 31st October, end of the month finally, and this month has been a month which we want to forget. Nifty has been continuously receding in the month. FIIs have been continuously selling, and today was another day where the markets did not hold their ground and gave up to selling pressure. Happy Diwali to all patrons of Weekend Investing. We have some offers that are continuously going on in this period. If you are interested, please use these codes. You'll get some discounts and you can start your journey with Weekend Invest. IT stocks have rattled the markets today. Should we be cautious? How have IT stocks done in the past and what kind of future do we see? This is going to be the topic of discussion in the second half of the video. Please read the disclaimer and sign on to the channel if you haven't so far. So the markets are continuously bleeding. They are headed as of now downwards. We are now, as I've been mentioning many times, this is the second head and shoulders pattern that is getting completed. This was the first one. This is now sort of completing a at least the head, and if there's a shoulder here, I don't know. Or if we straight go down, that is also possible. 0.5% down. So we've now closed at almost a 3-month low, and the month has just seen falls. We were here on last day of September at 25,800 or so, and we've closed at 24,200. So a month of losses in the last 20 odd sessions. We can be a bit depressed with the way markets are, or we can, look at the context that the markets at last Diwali were at 19,500. So in this entire Samvat, we have gone up by almost 4,700 points, which on a 19.5 thousand base is about little over 20%. So 20% gain coming on the Nifty, and of course, the other indices have had much larger gains. Is not a bad thing to have in the last 1 year. It's always, you know, positive when you see it from a larger perspective and larger context. But if you will see it from the shorter context of the recent highs, then unless you are on that day where the high is made, it will always look a bit slow. So this is part and parcel. No worries on that. Nifty Junior also 0.5% down, but still you can see playing within this large bar of last Friday. So not yet out of that. In the Nifty mid cap space, you had 0.19% down, neither here nor there. You can't really make anything out of that. Nifty small caps is where there was a 1.5% gain. So Nifty small caps have definitely come out of this last Friday's shadow, as well as this small pivot here, and actually targeting this average going forward. So I think Nifty small caps is giving a clear indication we have no further selling to do, not as of now at least. So it is largely the large caps that are under pressure, and of course the FI holding in that large caps is somewhere close to 18%. So there is endless scope of selling from that perspective, but that also you know should ebb sometime soon, I hope. Nifty Bank, however, lost some ground, and the big candle that we got on Tuesday, that has been completely erased today. Bank Nifty is down 0.64%. In the advance decline ratio, you still had advances of 303 versus decline. So even though overall market was down in terms of index, the CNX 500 is showing advances in favor of the advances uh, versus declines. And the FII trend on the last day was 4,600 crores of sell versus 4,500 crores of buy by DII. So evenly balanced, continuing that even balance on that. Heat map of the day, the major heat is in IT sector. IT sector was thrashed today. You can see Tech Mahindra down 4.5%, Infosys 2.5%, TCS nearly 3%, HCL Tech 4%. So that was the focus of the day. Whereas ONGC, L&T, these were the stocks trying to stabilize the Nifty. Other stocks were also down. ICICI Bank after the brief run in the previous sessions. Reliance also down 0.8%. ITC, Levers, Nestle were all down. So the major impact on the market today was primarily due to IT stocks. In the Nifty Next 50 space, you had the mother son boss Havells kind of stocks go down along with Zomato, Naukri. You had Vedanta go down. You had Varun Beverages, Adani Green, Gas Authority, a lot of stocks down. You had some gains in Torrent Pharma, Adani and Salt, Tata Power and Lodha, which were sort of counterbalancing the move. Overall, a mixed bag on both Nifty as well as Nifty Next 50. Within the sectoral moves, I would only say two sectors really mattered today. IT on the downside, -3%, and pharma on the upside at +1.6%. These were the decisive moves of the day. Rest were, sort of neither here nor there, I would say. And for the week gone by now, pharma is now in the green, and IT is now the worst performing sector for the week at -4.1%. The best performing remains the PSU banks, which clocked 4.6% for this week. The last 1 month, all sectors are in the red. The last 3 months also, all sectors are in the red except pharma. So it has been a dull last 3 month period, and after every dullness, there will come brightness. So we can always hope that this phase will get over soon. Pharma stocks, some of the stocks really going up very, very rapidly today. Cipla up 9%, JB Chemicals 4.1%, Granules, Ajanta Pharma, Torrent Pharma all gaining ground today. So more money is moving towards defensives as the stock market sputters, on its knees. IT stocks, which were, the stronger part of the Nifty till very recently, also, giving up that strength. In terms of the stock of the day, you had Ratan India Enterprise go up almost, uh, it should have been 16%, I think. So this is a sharp rally from 62 odd rupees to 74 rupees. And in the longer term, it has been making a sort of a flag, and it can really break out going higher from there. IT stocks have rattled the market. Let's see what is happening. So the weakness in IT stocks can be attributed to Microsoft and Meta platforms reporting their numbers for the September quarter last evening. The numbers looked fine to me, but as analysts have dug deeper, they have found that the forecasts or uh, you know, what exactly they said was it signaled that big AI investments were not enough to keep pace with the capacity constraints. So there is some mismatch between what is needed and what is being invested, and hence more investments may be needed, and hence earnings may get more delayed, and that is causing some at least a knee-jerk reaction within the IT stocks globally. Our IT index also, which had been hovering near the all-time highs for the last many months, today sort of looked like breaking down, and this we have retraced back to mid-July levels on the IT index. So this range that was there is sort of looking like breaking down. If it comes back up sharply within a day or two, then probably it's a false breakdown. But if it builds on this and goes towards 38,000, then definitely it is a clear breakdown that is happening. 41,300 was the support, which has gotten broken down. Earlier, we had this cup and handle breakout happening. So that was the sort of event which at least we thought that was going to, take the IT stocks up much higher. But it seems that this breakout also is sort of failing as of now. Uh, IT stocks have done well over the last many, many years. Of course, they did extremely well versus Nifty in the pre-2000 period. Just look at the kind of gains IT stocks had over Nifty in the pre-2000, 97, 98, and 99. And then there were some down years, and you had a big year in 2009 where 90% alpha was achieved over Nifty, and then another one in 2013, and then more recently 2020 and 2021. So every time Nifty is in a strong uptrend, which was 2009, 2013, 2000 post COVID 2020 and 21, IT stocks tend to perform very well in terms of the additional alpha over the Nifty. If we see the long-term chart, yeah, a, 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 Nifty CNX IT returns has been 9,000% in the last 30 odd years, 28 years, whereas Nifty has been somewhere close to 2,600%. So big sort of difference between the two major uh, indices. In terms of More recently, since 2000, when IT was making a top, since then it has petered out versus the Nifty. Nifty has done almost 1300% since 2000 versus CNX IT has done 441. But more recently, if we see, we'll find that since COVID, IT stocks have done quite well versus the Nifty. So Meta story also has been very, very choppy. So if we look at Meta chart, you can see there was a huge fall in post 2021. This is post the COVID crisis. So there was a huge crisis here, 77% down, and then it made a new top very recently, and then it's up 40% since then. So very difficult to play this kind of moves in the market where you're going up from $100 to $400 over 5 years, and then you collapse within half a year to $80, and then from 80 you're going to 600. So extreme movement of liquidity is happening in IT stocks, basis the narrative that is going around. And like today's narrative has been negative for many IT stocks, but I'm not sure if that will continue for too long. Uh, Somehow the narrative can turn very, very positive in no time. And you can see here that gradually, for instance, revenue growth on Meta has been tempering. So in years past, you had the CAGR growth or revenue growth at in the mid 40s or 50s, which is now petering off to teens. And of course, COVID was post COVID, there was a negative wave also. So the decline is there in terms of revenue growth, while the stock price is completely, sort of you can say uncorrelated to what we're having on in the stock price. So stock price and earnings or revenues are complete mismatch in some many cases, and that may also be a case where there is no issue in terms of Indian IT stocks doing well over a period of time, and this external influence which is causing these great blips to happen and some liquidity to flow out of these stocks. So even within the IT space, I think the large caps is where the damage was done. There was not so much damage on the mid caps of IT, and that gives me some hope that over a period of time, maybe a week or two, the stabilization on IT stocks may happen, and we may not have the same kind of impact that we are seeing today going forward. So if you have some specific information, or I would say a plan for IT stocks, or you may be employed in the IT sector and you may be having more insights, do share with us on the YouTube comments. It will be great to read about them. And once again, the Weekend Investing team would like to wish you a very, very happy Deepavali, and we will certainly see you very soon in the next video. Thanks. Bye.